Okay, so I'm going to be showing you how to use the quarter levels with the VW indicator, and then we'll switch over to the Fibonacci. So the way that I use it is looking at the higher time frame, right? Say that you're on the 1 hour, you're looking for your trend, you know where you're going to be entering in at. Okay, it's not reading. It's all right. Okay. Anyways, so say that you picked your trend, you know that it's a buy or it's a sell or whatever it is. So the way that I use it is I wait for to get the arrow. So say that we got the arrow here for the buy. You got your arrow here for the buy. Your MACD is in the sell, turning into a buy, right? So this is confirmation 1. This is confirmation 2, confirmation 3. I'm waiting for, after the arrow appears, I'm waiting for price to break above the next quarter level. So price broke above this quarter level, I would have got in for the buy. You could take it you could have took it up to the next quarter level, which would have been 25 pips, or you could have just took it up here, which would have been 50, and I'm out, right? This is going to help you enter and it's going to help you exit because it's going to always respect these levels. It's also going to respect the levels from the Fibonacci retracement as well. So say that you got your arrow here for the sell, right? You got your arrow here for the sell. Remember, we are waiting for it to break below the next quarter level. So even though it broke here, I would not have entered here, right? Because this is where you plan to enter at, right? So it broke here, you plan to enter here, but you're waiting for it to break past this quarter level because it entered in on this one, but we're not paying this any attention because it entered. So we're waiting for it to break the next one. So it came down here, it consolidated, you got the arrow to go up, you got another arrow to go down, and then you would have got in here and you would have took it down. From here, down 50 pips, right? You can do this once a day and you can do this all day long. Let's wait for it to reset. So all you really need is 30 pips a day, or you can even take 25 and be cool because once it breaks past the quarter level, you're gonna be cool, right? So here we go again. Sell broke here. You got your arrow here. It's still in a buy here on the MACD. We're waiting for it to break past here. It broke past here. It pulled up a little bit and then it dropped another 50 pips. Now I'm gonna tell you why I wait, right? Because say that you would have tried to get in here, even though it's not even matching your MACD, but say if you're not paying attention to your MACD, you're not even paying attention to it. You're like, oh, I got my arrow. Here goes your arrow. It came here to this quarter level, and what did it redo? What did it do? It turned back around and rejected. That's why I always wait for it to break past this one, break past the one it opened, and go to the next one before I enter, right? We can do it here too. You got the arrow here. It opened up in this one. We're waiting for it to break past this one. Break past this one. 25 pips. And you're done for the day, right? You could do this all day long and you're done for the day. Pay attention to your MACD or whatever other indicator that you're going to be using, whether it's an RSI or whatever, because it's going to help you determine where the price is, right? Because we're not guessing here. Now let's go ahead and do it with the fibs. I have my stuff all set up. The fibs that I use, they don't even have it on here anymore. Let me remove all this crap. So I don't need that one. We're gonna mute this one. And we opened up the fibs. This money flow is also like RSI, so it'll help you with the direction. Okay. So with the fibs, you can do it the same way, right? You can say, okay, Your RSI or your money flows down here. Here's your green arrow. I'm going to wait for a price. It opened up here below this fib level. So when it gets to the 50, I'm going to take it, right? What happens at the 50? You take it at the 50, you broke above it, 72 pips, right? Let me take this. This is a volume indicator. You can use this too. It's telling you where all the volume in the market is at. So let's take this off. Let's take some of this stuff off to clean this chart up a little bit. All right. So let's rewind back to the next day, right? Now, this price, it respected the quarter theory and it's respecting the fibs too, right? Pay attention to the consolidation here. Where is it at? It's between the 50 and the 382, bouncing between the 50 and the 382. Here's your arrow here. You can wait for it to break down here, and you could have took the trade right here. At your 618, take it down to the 782, roughly 25 pips at the end of the day, right? Give or take. We're going to use this arrow here. We got an arrow here. Came down to this fib level here, 382, rejected, came back up, touched the 23, and then what happened? Dropped back down. You would have took the trade from here, 62 pips, right? Everything, only thing you're doing is paying attention to price action. The indicators are going to help you guide you in and out of the trade. So just pay attention to the levels, because as we see, price is respecting these levels. Why is it respecting the levels? Because they're bank levels. Take it from here. When it was at the 236, what happened? Bounced around here, bounced around. Say if we was looking at it from here, bounced between this area here, and then it broke down. And where did it stop at? Another fib level, right? Even if you look at it on a higher time frame, you see all the dojis in between the 382 and the 50 here before it did what? Went down for the down move, right? Say if you were looking at it from right here for the buy, you got your green arrow here. You're going to wait for price to break above here. Or you could have waited for price to break above here, and then you take it up. Price is always going to respect these moves. It's going to respect the levels. So as long as you respect the levels, there's no way that you're going to lose. Why? Because price is going to respect the fib levels. It don't matter what pair you trade. Let's try Bitcoin. It don't matter what pair you trade. Price is going to respect these levels. Why? These are bank levels. Whether you want to acknowledge it or not, these are bank levels. Okay. Same thing with Bitcoin. You got your red arrow here. Okay. Waiting for it to break past the next area. Came down to the 382. Consolidation, consolidation. And then what did it do? After it broke past the 236, you could have took it down right here. Another thing, the money flow was telling you that price was almost overbought because it's almost at the 80, which if price is in an overbought area, we're not looking for buys. We ain't looking for buys in an overbought area, right? We can rewind it back here. You got your red arrow. Price here is in an overbought area. Why? It's up here to the 80. waiting for it to break past the zone, right? On the fibs, you could have took it from the 618, depends on how confident you are or whatever your trading strategy is, right? You could have took it from the 618 here. After you got your red arrow, you could have took it down to the next fib level, or you could have got in here and you still would have made profit. You could do this all day long, all day long. Why? Because it's going to respect these levels. Look at this here. 236, 382. What is this? In between these levels, nothing but consolidation, nothing but consolidation. But if you pay attention, price is respecting this level, right? Came up here, consolidation in between both of these levels, broke back down, didn't close below, wicked back down. And then what did it do? Came back up to the same level before it broke out. Then what did it do? It came back down, touched the same level before it broke down. Then what did it do? It came back to the same level. It came back to the same level that it was at here. You could do this all day long. All day long, all day long. Do it here, okay? Your red arrow here. Wait for it to break past the 50, take it down to the 60. The 382. Jesus. You could do this all day long. Only thing you're doing is you figure out where price is at, figure out where the trend is at, and you're waiting on your confirmation to enter. Make sure that the higher time frame is matched up with the lower time frame, because the lower time frame might be telling you that it is a buy, but you might be in a pullback for a sell. So you don't want to get faked out. So always confirm with the higher time frames. Use the lower time frames for your entry, right? I don't think that Bitcoin really respects the Fibonacci level. I mean, not the Fibonacci level, but the quarter theory level. But it does respect the fibs. So there you have it. VDub is going to give you the indicator. I mean, it's going to give you the indication whether it's going to go down or whether it's going to go up. We're waiting for the arrows, waiting for the arrows. So what would have happened if you would have not followed the rules, right? What would have happened if you would not have followed the rules? You got your green arrow here for the buy, came up, broke above it. You'd be like, oh yeah, it's about to go back up, right? It's about to go all the way up here. What happened? Never broke above this 618. And what did it do? It reversed. Came back down again. You got your another green arrow here, right? Okay, I'm about to get in for the buy. Came up here to the 50. Never broke above the 618. You would have took it if it would have broke above the 618. But it didn't break above the 618, so you wouldn't have got in. But if you would have got in, you would have got stumped right out, right? Why? Because what did it do? It reversed as soon as it came here. But what did it do before it reversed? It respected this level. It never broke above this level. So that's it. That's all. You can use any other indicator that you want to with this one, but the fibs, the VDub, the quarter theory, they all work perfectly together. All this other stuff is just telling you where price is going, if it's going to be in a buy, if it's going to be in a sell, and you just want to stay on the right side of the trade. All right. All right.